Hi, I'm Tiffany Fykes with the Fykes Realty Group, and I am here to talk about what is happening in interest rates in September of 2025. And more than anything, I really want you to understand how interest rates move, why it matters to real estate, and what you need to know. So, number one, I know it was all the talk. If you follow anything in the economy or probably the news, the Fed met last week and did a 25% basis reduction in the interest rate. You may also have noticed that people were like, we need the interest rate to go down. We need the interest rate to go down. Now, here's what you need to know about that interest rate versus the mortgage interest rate, which is what helps you as a seller or as a buyer in the real estate market. They aren't correlated necessarily. They're connected, obviously, but interest rates in the mortgage actually dropped when the economic data came out probably 2 weeks ago. And then when the Fed dropped the rate, it actually went up just a little bit. Now, why? Because mortgage rates are actually tied to the bond market, not to the Federal Reserve interest rate. And the bond market is looking at the overall economy and what are the signals. So a couple of weeks ago, we got a negative signal in the economy because the employment numbers dropped. Okay, so then what happened? Long term, there looks like there might be something going awry in the economy, and so mortgage rates dropped. But then you've got inflation. That's what the Fed is looking at, trying to keep the economy, balancing all these things you've heard me talk about. But what that actually means is mortgage interest rates often drop before the Fed reduces their interest rate. And so that's what you need to know. Mortgage drops before the Fed. So if you're thinking, I want to buy when the mortgage rates went down or go down, you don't want to wait for the Federal Reserve to drop the rate because, like I said, mortgage rates actually jumped post that announcement. And by jumped, I mean a little bit, but still, every little bit helps. So like right now, I just texted one of our mortgage partners who works with a lot of our clients, and she was telling me that, she just locked somebody in at 6.125. That's an awesome interest rate. So you don't want to wait for the Federal Reserve to jump off. Now, what also happens is when interest rates drop, buyers buy more, which helps the economy or helps the housing market keep going up. There's more buyers, there's more prices, all of that. So my big lesson for this month is do not wait for the Federal Reserve. Mortgage rates actually move before that. And you're always looking at the overall economy. Do we want interest rates to go back down to 3%? Probably not, because what that means is there's something majorly wrong in the economy that is having to get adjusted with those interest rates. So when we get into the fives, which I think probably is going to happen, that is an amazing time. And we're already 6.1, we're almost there. So if you are thinking of selling or buying, we're about to be in the market you want to be in. And so don't wait until you hear about it, because once you've already heard about it, mortgage rates may have already come up. So reach out to our team if we can help you in any way. And that's what you need to know about mortgage interest rates.